I'm Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, the 23rd of August, 2021. We're at 5:35 p.m., and that is Central Time. Wow, I feel like a novice sometimes in these markets, and today was one of those days. You were up dramatically in market upon market. It's as though a supercharger got under everything, and away they went. The Pfizer vaccine news came out where it's been approved. That's one thing. The situation in Afghanistan, to me, it looks worse than ever. That's another piece of news. The House of Representatives is meeting tonight on some procedural votes. They're hoping to get this packages that they want to vote on done in 2 or 3 days. We'll see. It sounds like there's a bitter fights going to develop there. Energy prices took off again. Bonds went nowhere, and the dollar down 54 points. Now let's go to the chart action, because I truly can't explain it to you. I wish I had fundamentals and all that to go with it. I don't have them. This is, to me, typical summer crazy action that comes out of nowhere. When we look at a weekly area chart of closes, it's only Monday and we're into the Tuesday session right now. We're up $22 for the week. That's very big. The resistance point is the 18-week average of closes. My theory is that as long as it stays under that, you have a bearish bias on the weekly charts. On the daily charts, you had this monster washout on the jobs data, and you have made all that up, and you're now back into that resistance area that the market had. You can see you've climbed right back into that, and it did it quicker than I thought it was going to. I did not think the market would have this power off that break to come back $125, $130. So shame on me. Well, I'm not a bottom picker. I'm a trader that looks at trends, and the trend was broken. But now with today's action, after coming up $130, the market is saying, hey, come on and buy me. Yeah, higher lows, higher highs. You got that part. You're over the 18-day average of closes. The bias is up. When we were down here, we had talked about where would the resistance points be. I had been saying in my morning subscriber video and in this video that I see the 18, the 100, and the 200-day average lined up in bearish patterns, that if the market got into those would be the resistance points. Did I think it was going to happen this fast? I promise you I did not. So this took me by surprise. That doesn't mean that my patterns haven't changed, that I still see 1813 as a resistance, 1821.70. But the trend is up, the bias is up. That means the pros, well, without looking if the market's overbought or not, 1784.70 is the support zone. If you take out 1778, you reverse this pattern. Now we take a look at the Bollinger Band. That's pretty far away, and the one under it is far away. So where is momentum? It's overbought as can be. So I'll stick with what I know. Surprised? Absolutely. Market came alive. I don't think we'll be looking down here again unless some bad news of some type of, I can't imagine what that would be, would wash that down. The market's built in the fact already that sooner rather than later, the Fed's going to begin tapering. Is it now? Well, they called off the FOMC symposium for a meeting in person. So now it's back to virtual. That sort of gives everybody a pause factor, you would think, because they can't even meet because the COVID situation's where it's at. So what's the rush to make that decision at this week's meeting, which starts on Friday with the lead keynote speech by Fed Chair Powell? Now, he can wait until the FOMC meeting in September. As they get more data and they see how the COVID is going, he can do it later. But I'm just saying, I have my doubts that it's this time. And I know a lot of traders would like to get that out of the way, but you've already done a lot of the discounting of that in the market. When you look at the gold-silver ratio, finally silver gaining something back on gold, but it's not in a trend either. You still have a higher high and a lower low from last week, and you're just sort of dancing around there. The copper market has said, too cheap at 396, but you got a lot of resistance starting at 429, let's call it, all the way to 437. It's a bounce. You're back in the bands there, but that's all that it is. I want to also point out something. Hitting these lower Bollinger Bands, when you look back, not a bad place still to have come out. Trying to pick a bottom, I'll let better people than me do that. I don't know how. Same thing in platinum. You get down to that lower Bollinger Band, what are you hanging around for? That's what I teach in my enhanced Bollinger Band course. And I have found it serves me well. Does everything work all the time? No. But if you're short and you get out too soon, so what? So what? All right? There's always another trade. Remember, always, what you think is one time isn't one time. There's always another setup. What you won't catch are days like today. They're far and few between. In the palladium, so you have your big, how much was this market up today? Just take a look. $107, but at its peak was about $132 an ounce higher. It had 4 days in a row of closes under the lower Bollinger Band. 5 is the most I ever look for. That gives, on a fifth, 0% chance, the way that I do the counts, and I've explained it here for you on those, that the market will bounce. But I'll tell you something else that doesn't agree right here. Start looking at the slow stochastic. Both numbers are under on Thursday, 20. Both numbers on Friday under 20. You're still under 20. I think the pros are going to hit the market if this market doesn't close with this number here over 20. But it's 25 right now on Tuesday night, remember. So when you close today, this is where you were, but now you're over it. So if the market loses this steam here, be careful. It is losing that pattern. And again, let's count, just so we see it. Day 1 of embedding, not here. Come on. There's day 2. Day 3 was today. So you let the third day go by you, then you're looking to see, is the market going to come? And there's a key moving average you look for to sell it. You don't sell it if you're losing the embedded reading. So that's what the market's done. If this reading stays lost, I'm staying on this for a moment because it's important, then you target all the way back at 25.60. If it re-embeds, watch out. That's what we have to look at. If it loses it on Tuesday, it can re-embed on Wednesday. After that, it can't do it. Take the charting course. I teach that. Dollar index. I'm going to go back to what I teach in my enhanced Bollinger Band course. Each time you hit that upper Bollinger Band, it depends if you're embedded or not embedded, what the trade does. You're not embedded. I think on Friday, first time you've hit it, I think the pros came out of the market. And I know I have naysayers out there, you'll leave all that money on the table. They could be very right. But I'll be teaching to do it there. I'll be teaching to do it there. I'll be teaching to do it here. And if you then embed, we're looking to come back in another way. Again, it's not about catching tops. It's about taking the fillet out of the meat. Got it? You're looking for that best piece if you can get it. And this is what the dollar index did today. So yeah, for 2 days it went up there. Now it's 50 points lower. It's overbought and in a correction. Does that mean the trend is over? No. You still have higher lows, higher highs. The support will be wherever that 18-day average comes in. You put that together, you try to come up with game plans, and that's what I do in the morning. When the morning was going this morning, I was telling my traders, this market's acting like everything's moving to the upside. And boy, did it come alive as the data just kept coming out. The Chicago Regional National Index came out strongest can be. We were a -1 reading. We're a 53 reading. I mean, this gives you an idea as to what's going on. I was talking later in the day about how strong Europe is right now. Even with COVID, their numbers are stellar. So you try putting that all together. Then I rolled later on into the ETFs and the spiders, because now it's 840, 850. I'm waiting, and at 9 I started putting all the numbers together. There were a lot of data coming out today. I cover all these markets in the marketplace, so you get that in one sector, and then as you move over and you want to trade into the spider ETF, you'll see I cover about 40 charts in that. But I also cover Amazon, Hack, different markets on the ETF, and on the futures, I'm covering all the futures markets. I'm mixing them both up today here to give it to you. $7.95 for 30 days. The worst thing that happens for your $7.95, you don't like it and you stop. The best thing that happens is you pick up a thought or two and you say, darn it, that seems to make sense and that balances out what I'm doing. Folks, we're getting into the season. Spring training is over. In September, the season begins in trading. People come back, volume typically starts rising, everything gets a lot more serious. Summer months are the hard months. The easier months, my experience has been in the fall and the winter. Let's see if that's true. To find out more, go to our website under the word research. You can always call my staff, they'll work with you. I'm Ira Epstein. You have a great day.